Good morning, gang. Good morning. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor, and this is just for educational purposes only. And now that we got that out of the way, Bitcoin. So we've had a little bit of fun since our last video. Our last video, funnily enough, was Thursday, and I think price action was about here when we were recording the video for YouTube. And we were saying at the time we're advising caution where we were, and the reason why we're advising caution is because we were coming into our first major sticky zone. So obviously this sticky zone is what we've, to be fair, been publicly calling on YouTube now for quite a long time, saying this is your first major area of resistance. Once we're broken out of this top range here, obviously this is the top range that obviously we've been trading for quite some time. Once we broke out of the top range here, the next really major sticky zone was this here, okay? And then we just started coming into it. Now, one thing that's worth mentioning here is you will notice that throughout this whole move up here, after we had, obviously, we talked about this on last week's video, we had all the influencers posting a million different patterns within this, and then each one overlapped itself, and there was just, it was just breakout. And at the end of the day, we were telling you guys, it's just a range, okay? It's just a range. It's a simple range. But then, obviously, once we started breaking out of this, the FOMO and the euphoria that came out on Twitter or X, YouTube, all your favorite moonboy influencers saying, you know, did you buy the dip and all this fun stuff, and they're all getting very euphoric. There was images of Lambos out, everything else. It got crazy. People were long in the longs. You could see the FOMO in the market up here. We could see it on the order flow. We could see the massive amount of market longs just coming into the market. Where are we? Back here. You know, there was so much FOMO within this. We could see open interest increasing, delta increasing. Yeah, it's healthy. Don't get me wrong, it's healthy for a move. But it was starting to get a little bit overexcited, and we started getting the vibes, like we were saying in the group at the time, of if anyone cast the mind back to back here, the old laser eyes and everything else that was happening. And it's when the market gets a little bit too euphoric. But obviously, we were warning you guys, we're coming up into this sticky zone. It's time for caution. This is not a time to start longing your longs. Not straight into resistance. This area here, effectively from the breakout of this channel, this area between here and here, yeah, thin space. You know, you don't need to be a rocket scientist to figure that out. You know, we're quite simply, let's just throw it on a volume profile. Take this out of log. And we can see here, you know, this was a thin area. Thin area. We had a thin area here. This has thickened up a little bit, obviously, since we're putting this price action here, but this was thin. This was thin. And the next major sticky zone was just above us here. Okay. So therefore, yes, you can see the excitement in the market, and you can understand why people are getting excited, especially breaking out of this top range here. But then we're coming into our first sticky zone. So now it's not a time to be long in your longs, not into resistance. So obviously that's the reason why we were saying exercise caution where we are right now. And obviously once we did come into that level, we faced a pullback. Okay, we got that first pullback, which then ended up dropping down, and then it's been bought up quite quickly. Okay, so let's talk through that. So this was a nice trade within the group. We do have some trades to run through this week, so we're going to talk you through them. So I'm going to zoom in here. Let's zoom into the 1 hour chart, and we can talk these through. So when I was doing the video, price was roughly around here. Okay, this is when I was doing the update, and then in the end, we got this big spike up, and then a big rejection that followed. Okay, so at the time, I'm doing a 2 hour long live stream with the members talking through this price action, because what I didn't want to do, especially any inexperienced members that we might have that are fairly new to the group, is I didn't want them trying to short every single little rise on the way up here and basically just blowing through capital, because there was no good short trades on the way up here. No good short trades at all. Okay, the next area of interest that we had was this channel here. So here's a little clip from that 2 hour live stream that we had. That channel's just above us. Now we see what goes on. Give me a really big spike up here into that channel with a fuckload of volume, and then that, to me, will give me the volume that I'm looking for that slow bleed environment. Big fuck off candle up into this zone. Then give me that structural reversal. Then I'm happy shorting all day long. So as you saw there, that's what I was looking for. So one thing about trading and TA is people will give you these set levels and set systems, okay? But they don't really talk about your entry criteria and the context of how something moves. So you've seen me talk about this time and time again in the past. And what we had here, what we were looking for is we had this slow grind up, not making much progress in each candle, not making much progress, and each one's getting wicks back down, wicks back down, wicks back down. So what I was looking for as I was talking to the guys on that stream is I was looking for a big spike of volume up into this channel. And this is a channel, an Elliott Wave channel that we've been watching in the group. Big spike up into this channel, and then a clear rejection from there and a structural reversal. And then that will give me my entry trigger. So that's what I was looking for. And in the end, again, if we bring back the volume, take it out a log, we can see here we had slightly increasing volume, as we can see here. And then what did we get? Right into that channel line, we had a big chunk of volume. So we had a load of volume come in, and we could see this on the order flow. I'm just showing you this on TradingView for the time being. We had a big chunk of volume coming in. It was a really rapid and aggressive move up. Okay, and that's what I was looking for. So that big aggressive move up with lots of volume, and then it gives me my idea to get my trigger now. So I've now got the trigger to press short. Okay, so while everyone else is getting FOMO up here, I'm just patiently waiting along with the members to short this market back down. Okay, and in the end, this is what we got. We got a nice little scalp out of this initially, which we played down on a very low time frame. Then we came back up, and we got the opportunity to add back in, and then we traded it yesterday, well, in fact 2 days ago, all the way back down to our next area of interest. Okay, so in the end, it worked out as a really nice trade. Okay, so rather than trying to long your longs up here, after seeing something like this into a key sticky zone, again, like I've been telling you guys for a long time, it's not the time to look for longs. It's time to take profit on your longs and potentially, if you wanted to, a hedge opportunity. Okay, so this is what we're looking for. Now, the following day, so obviously this was Thursday the 9th when this happened. So the following day, I'm coming into the group straight away and I'm saying, right, we've got that rejection now. It's a nice rejection. If this is to play out, and again, I'm not going to sit here and I'm not going to speak like I 100% knew this was going to drop all the way down here, because I didn't. Okay, this could have quite easily come down here and then buggered off back up to the upside. Or it could have just dropped straight down. Okay, so I'm not going to sit here and laugh. I'm never going to do that with you guys, because you guys come here to watch this. You want to learn from me, and you also want the no bullshit, the no nonsense stuff. Okay, but what I'm saying to the guys in the group is I'm saying, right, we've had that good reaction here. The next strongest zone of support, and again, this is the following day, so this is the 10th, so this is after the rejection. Okay, so this is the Friday, so this is here coming into the group. The next strong support that we've got to the downside is around this golden pocket here. Okay, see here, it skews all the rest of the mess because I actually left all my TA on the screen when I was talking through this. But this is what I was looking for. Coming down here, the next best area for a long would be down at this zone. And once again, this is not hindsight, this is literally the following day. After seeing that rejection there, I'm coming into the group the following morning, in the morning update, and I'm saying the next best support is down at this zone here. And in the end, that's what we got. Now, the trade took a while before we ended up getting down to here, but we just sat and waited patiently. We got the nice drop down. Once again, we had a very similar scenario to this up here. Okay, so I'm going to talk you through this and you can learn from this. We had a very similar scenario. So where we had here, we had this grinding price action followed by a big spike of volume. We had exactly the same thing over here. We had grinding price action, followed by a big spike of volume. Now, once again, if we bring up that volume, you can see this. Grinding price action, we can see down here. We're on the 1 hour chart here. Let's just move this out of the way, please. Hide, thank you very much. Grinding price action, no real volume to any of this. It's just grinding. And then we had the big sell-off. Big amount of volume into a key significant level with a damn good reaction off the back of it and a damn good buy up. And then we got the reversal. Okay, so this is what I call context. So it's all right having levels on your chart. Like I had this level on my chart. Okay, but it's knowing what to look for when price comes into that level. That's what gives you the edge over the market. And if you can figure that part out, then you can do really well out of this market. Okay, because anyone can plot a golden pocket. Anyone can plot a golden pocket. Okay, we know that a golden pocket is a strong zone. Okay, now for me, it's the golden pocket down to the 786. But it's a strong zone. But it's knowing when you're going to take that trade or when you're going to sit back. Because this golden pocket didn't have to hold. It could have gone lower. But it's knowing what you're looking for as price approaches these levels. Okay, so as we're seeing this price down here, we did actually have a level down here. We had a naked point of control just under here. Now, this first move down ended up front running it, and we came back up. Then we came back down and we front run this level again. Now, just for illustrative purposes, it was roughly around here. We had a naked point of control down here, and I was interested in taking a scalp long off this. But we came down through the night, and we front run it, and we came back up. Then we came back down, and at this point, I was telling the guys in the group that I was interested if this, at this moment here, came down, took out these lows, reversed, after hitting that naked point of control, then I was happy then to take a low time frame scalp, and it potentially could have been an intraday play as well. But what happened is we front run it again. And then we came back up. And at this moment here, I'm coming into the group and I'm telling the guys I'm no longer interested in this level. There's no longs for me at this level. Now I'm patient and I'm waiting for down at this golden pocket. And in the end, came straight through it. Okay? So it's all about understanding what you want to see at a level. That's what really sets you apart. That's what gives you the edge on the market. Okay? So, now we've got that part out of the way. We've had the move up to the highs. Okay? So this trade here, still sat in this trade. Ideally, what I'm looking for is to take out these highs. Okay? However, I'm still aware that if we bring back this channel, we're still within this channel. Okay? So if we do start to lose some structure here and start to break down, then fair enough, I will close a larger portion of this long out. I'm already hit a take profit 1. And I'll close a larger portion of this out. Because if this channel is going to remain intact, then we could see a reversal here. Okay? So I'm very much open to that idea. However, from an Elliott wave perspective, it does make more sense to come up and take out these highs. Okay? So, let's talk about what could happen next. Now, before we get into that, if you guys want to learn and get access to the live streams that we do and understand things like context on what to look for when you get to your areas of interest and when you get to your key levels, first and foremost, come over to our website, spitfiretraders.com. Okay, there's a bit of an announcement again about this. Come over to the Join Us tab. Now, you guys know that we like to keep things affordable because we don't like to create a paywall for you guys, which is why the normal price is $59.95 Great British Pounds, or in US dollars, that's about $75. Now, you guys know, if you've been watching us for a while, last month we ran a trial promotion in the group to give you guys a taster to see if you enjoy our content or don't, and the educational material that's in there. And we ran a trial for 25 Great British Pounds for your first month access. And obviously, if you weren't happy after that first month, that's fine. You could cancel it and you didn't have to continue the membership. Now, because we got such positive feedback on the back of the last trial offer that we did, we've decided to return it again this month. However, we've put a limit on the numbers that we're going to allow in. Okay, because I don't want the group to get too big because there's only me managing it. Okay, and I want to ensure that every single member gets a portion of my time so they can learn from me. Okay, so if you do want access for £25 into the private group that's got all the modules, all the educational modules, including the daily update, says today's daily update, in fact, all the educational modules that we've got, everything from absolute beginners through to how to enter and managing your trades, again, like we've just talked about there, what to look for at levels, you've got patterns, you've got Fibonacci, you've got Elliott wave theory, you've got a load on psychology. There's so much content in there. There's over 55 modules, okay? And we've just done another one as well because we're starting to do price action trading now. Forex, there's everything in there. And it'll cost you the grand old price of 25 quid. At checkout, you just need to enter the code TRIAL25. But as I say, once the spots are filled, then that's it. The promo will end. So if you want access, then jump on today. Right, now, what we're looking at next. That's the big question, okay? So first and foremost, we are still, I'm just going to bring this box back, we are still within this sticky zone. Now, this sticky zone is quite large, okay? This sticky zone is quite large. And it's large for a number of reasons, because we've got some confluence down at the bottom, and you saw that channel. We've also got confluence towards the top of this zone here, okay? So first and foremost, if we get another spike up and then start to roll over, that'll give me the idea for some new shorts. Okay. Therefore, I'll be a short seller all day long, and then I'll be playing that down, and I'll be looking to see if we break some trend. If we don't start to break any daily structure and changing the daily trend, then I will cut nice and early. Again, I'm shorting against the overall trend. The overall trend is still strong and it's still up. Okay, until that trend breaks, I've got to understand that any shorts that I take is against the trend. Okay, that's absolutely fine. Okay. If we don't get a reaction within this zone, then realistically, the next major levels are above. And again, we've been talking about this for quite a long time. We draw it on a volume profile of the whole top range. Okay, the next major level above is this zone here. Okay, this zone here. Roughly around this point of control, so around 47, 48k, up to probably 49, 50k. Bit of a zone here, because again, we've got plenty of confluence in this level. And if this offers nothing here, then we can start to look at this zone here. And then if we get an opportunity to be a seller within this, then we will do. And obviously take profit on our longs. Okay. Now, to the downside, what happens to the downside if none of this works out and it just starts to roll over here? Okay. Well, the downside, realistically, you need to start losing this level here to start breaking any major structure to the downside. Okay. On a higher term time frame. If you start doing that, then we can start looking at some lower prices. And realistically, it's quite thin down here, so you can't get too excited. Your main level, again, once again, you'd be looking around this 618 to the 786 zone. If that offers you something, then you've potentially got some longs within this region. If that offers you nothing, then let this roll over. Now, within that same breath, if that is the case and it does start to roll over, whether it comes higher and then rolls over or starts to roll over from here, then you've then got to be aware of the old top range that we were trading. Okay. Once again, people are going to likely try to defend this zone, but it is quite thin. So it will be probably an overcrowded trade. So there's something that you've got to question about this. Does this work or not? If it does, then great. Start looking back up. Higher prices once again. If not, do we get acceptance back into this range? And then we're back to trading this range. Okay. If we do get acceptance back into this range, now this isn't a death sentence. This doesn't mean that's it. It's going down and Capo was right and we're going to get some crazy, stupid low prices. It just means that we've got acceptance back into this range. So we're back to trading this. Okay. If this then fails, then we go back to the old macro range, which was this one. Do we get acceptance back into there? If we get acceptance back into there, then we're just back to trading this range with a key emphasis on your key sticky pivots. Okay. So it's just level to level. So there's no need to get overly bullish, overly bearish, level to level. Each range can be traded by itself until it breaks. And eventually every range does break. Okay. Nothing stays range bound forever. It'd be nice if it did, because it makes trading a hell of a lot easier. But that's what I'm looking for next. Okay. So we're still within this sticky zone here. I wouldn't mind another swipe up of these highs into this zone, and if that offers us nothing, then we can start looking up realistically at these higher targets down here, up here, sorry, and then to the downside, and then we're looking lower. Okay, so if you've learned something today, or you've enjoyed today's video, hit that like button. If you're not subscribed, consider subscribing, and don't forget to hit that bell notification button. Then that way you get access to the updates in real time, and you don't have to watch them back after the moves played out, like last week if you missed it. All right, gang, that'll do. As you were. Bye bye.